Your credit score is more than just a number. It is not some random 3 digits that a bank assigns you. It is your financial report card. It tells lenders, landlords, and even some employers how responsible you are with money. A high score says you are reliable. It says you pay your bills on time. It says you can be trusted. A low score, however, sends a very different message. It screams risk. It tells the world that you might not pay back what you borrow. This single number has immense power over your life. It can open doors, or it can slam them shut in your face. Think about what you want in life. Do you want to buy a car? Do you dream of owning your own home? Do you need a loan to start a small business? All of these major life goals are tied directly to your credit score. As we navigate 2025, understanding this is more critical than ever. The world is changing. Financial systems are evolving. But one thing remains constant: the importance of being financially responsible. Your credit score is not set in stone. It is a living, breathing number that changes based on your actions. You have the power to raise it. You have the power to protect it. You have the power to make it work for you, not against you. In this guide, we are going to look at the 5 biggest credit disasters people are making right now in 2025. And more importantly, I'm going to give you the simple, powerful steps to avoid them and fix any damage that has already been done. It is time to take your power back. The single most destructive thing you can do to your credit score is pay your bills late. Your payment history makes up the largest part of your credit score, a full 35%. One late payment can cause your score to drop dramatically. A payment that is 30 days late is bad. A payment that is 60 days late. A payment that is 90 days late. It stays on your credit report for 7 long years. Let me give you a real-life example. Meet Sarah. Sarah is a young professional who is usually very organized, but last month things got hectic. She was traveling for work and had a family emergency. In all the chaos, she completely forgot about her credit card bill. She did not realize her mistake until she got a notification that her payment was 30 days past due. She paid it immediately, but the damage was already done. Her score, which was a solid 750, plummeted by nearly 80 points. The consequences for Sarah were immediate and painful. She had been planning to apply for a car loan the very next month. When she went to the dealership, her loan application was approved, but the interest rate was shocking. Over the 5-year term of the loan, that one late payment would cost her nearly $6,000 extra in interest. This is what I call the late payment landslide. It starts with one small slip-up, but it can quickly gather momentum and cause an avalanche of financial problems. This can lead to financial stress, which can make you more likely to miss another payment in the future. It is a vicious cycle. You must stop it before it starts. Every single bill, every single month, must be paid on time. There is no excuse, there is no wiggle room, on time, every time. The number one way to prevent late payments is to take human error out of the equation. You are busy, life is complicated, you are going to forget things. That is why you must set up automatic payments for every single one of your bills. Your credit cards, your car loan, your student loans, your mortgage, or rent everything. Go to each lender's website right now. Log into your account. Find the section for automatic payments, sometimes called autopay. Set it up so that at least the minimum payment is automatically withdrawn from your checking account on or before the due date. Now, some people get nervous about autopay. They say, what if I don't have enough money in my account? That is a valid concern, but it is a budgeting problem, not a payment problem. Your first step is to know your cash flow. You must know when your paycheck comes in and when your bills are due. If the dates do not line up well, call your creditors. You can often ask them to change your payment due date to a few days after you get paid. What if you have already made a late payment? First, pay the bill immediately. Then, call the creditor. Explain what happened calmly and honestly. If you have a long history of paying on time, ask them for a goodwill adjustment. After you have set up autopay, your job is simple. You must build a new perfect payment history, starting today. Every single payment from this moment forward must be on time. There are no exceptions. The second credit disaster you must avoid is carrying high balances on your credit cards. This is about your credit utilization ratio. That sounds complicated, but it is not. It is simply the amount of credit you are using compared to the total credit you have available. This ratio accounts for about 30% of your credit score. Here's an example. Mike. One card, a $5,000 limit. Over the holidays he got carried away. He bought gifts, he went out to dinner, he booked a small trip. His balance ballooned to $4,500. His utilization jumped to 90%. He was walking the high balance tightrope and his score was wobbling dangerously. Even though he never missed a payment, his score took a hit. It dropped more than 50 points in 1 month. Using almost all available credit made him look like a huge risk. Many people think making the minimum payment is fine. That's a dangerous myth. The minimum payment is a trap. It's designed to keep you in debt and let the card company collect maximum interest. Mike saw his statement. Paying minimum would take over 15 years to clear the debt. He'd pay thousands in interest. The magic number is 30%. Aim to keep balances below 30% on every card. For an excellent score, aim under 10%. Low balances tell lenders you have finances under control. That's financial strength and maturity. If your credit card balances are just way too high, you really need a plan to attack that debt. The first step is to just stop adding to it. You must stop using your credit cards for new purchases. Cut them up. Freeze them in a block of ice. Switch to using a debit card for daily expenses. This forces you to only spend money you actually have. Next, implement a debt paydown strategy. Debt snowball. It's motivating and powerful. List your debts. Exclude the mortgage, from smallest to largest. Make minimum payments on all debts. Take every extra dollar and throw it at the smallest debt. Pay it off as fast as possible. Quick win, momentum. Roll the full payment, minimum plus extras, to the next smallest debt. Now attack the second debt with a bigger snowball of money. Repeat the process. Your snowball grows and knocks out larger debts faster. Ask for a credit limit increase to lower utilization. Example, limit 5,000 to 10,000, balance 4,500. Utilization 90% to 45%. That can boost your score, but don't spend more. A higher limit is a tool, not an invitation. The third credit disaster is applying for too much credit in a short period of time. Every time you formally apply for a new loan or credit card, it results in what's called a hard inquiry on your credit report. A hard inquiry is when a potential lender pulls your full credit history to make a lending decision. Let me paint a picture for you. Meet David. David decided he wanted to take advantage of all the credit card sign-up bonuses he saw advertised online. In just one weekend, he applied for a new airline card, a hotel card, and 3 different retail store cards just to get a 20% discount on his purchases. That is 5 applications. That means 5 hard inquiries hit his credit report all at once. Even though he had a decent score to begin with, the flurry of activity was a huge red flag. His credit score dropped by 25 points. He looked like he was in a financial panic, even though he was just trying to be clever. The temptation is everywhere, isn't it? You're checking out at a department store and the cashier says, "Would you like to save 20% on your entire purchase today by opening a store credit card?" It sounds so easy. It sounds like a great deal, but that deal comes with a price. A hard inquiry on your credit report. Applying for credit is not like window shopping. Each application leaves a footprint. This behavior is particularly damaging if you're planning to make a major purchase soon, like a house or a car. Mortgage lenders are extremely sensitive to new inquiries. If they see that you have recently opened several new lines of credit, they may delay your loan or even deny it altogether. Don't let a 20% discount on a new pair of jeans jeopardize your ability to buy your dream home. If you have already gone on an application spree, the first and most important thing to do is stop. Just stop applying for new credit. You need to put yourself on a credit timeout. This means no new credit card applications, no new loan applications, no store card applications at the checkout counter. The good news is that hard inquiries do not affect your score forever. They only impact your FICO score for 1 year, and they fall off your credit report completely after 2 years. So the primary solution is time. You need to enter a cooling off period. For the next 6 to 12 months, focus on the fundamentals. Make every single payment on time. Work on paying down your existing credit card balances to lower your credit utilization. Do not close any old accounts. Just let your credit profile sit and age gracefully. During this cooling off period, you should also be monitoring your credit report. You can get a free copy of your report from the official government-mandated site, annualcreditreport.com. If you see an inquiry from a lender you do not recognize, you must dispute it with the credit bureau immediately. Going forward, you need to be strategic about your credit applications. Do not just apply on a whim, do your research first. Apply for only one card that meets your needs. Then, wait at least 6 months before applying for another. We've walked through the biggest credit disasters of 2025. We have talked about the landslide of late payments. We have talked about the tightrope walk of high balances. We have seen the damage from application sprees. We have seen the mistake of closing old accounts. These are not just theoretical problems. They are real-world mistakes that cost people real money every single day. The fifth and final disaster is simply doing nothing. It is the disaster of inaction. It is sticking your head in the sand and hoping your credit score will magically fix itself. It will not. Your financial life is not a spectator sport. You must be an active participant. You must be the one to set up automatic payments. You must be the one to create a debt paydown plan. You must be the one to stop applying for credit you do not need. You must be the one to keep your old accounts open. No one can do this for you. Your financial future is your responsibility. I want you to take one action today. Not tomorrow, not next week. Today. Pick one thing from this guide. Maybe it is setting up autopay on one credit card. Maybe it is checking your credit utilization ratio. Maybe it is pulling your free credit report to check for errors. Just do one small thing. Small, smart choices made consistently over time are what build a strong financial foundation. Each on-time payment, each dollar paid toward a balance, each month you keep an old account open, it all adds up. You are the CEO of your own life. Your credit score is one of your company's most valuable assets. Protect it, nurture it, make it grow. A strong score is a key that unlocks financial freedom. It gives you options, it gives you power, it gives you peace of mind. You can do this. I know you can. Now go out there and take control of your financial destiny. You deserve it.